This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices rose on Thursday, boosted by a large drawdown in U.S. crude inventories and production cuts by OPEC+, but a slowdown in China's manufacturing activity limited gains. Brent crude futures for October, expiring on Thursday, rose 45 cents, or 0.5%, to $86.31 a barrel by 1004 GMT. The more active November contract was up 25 cents, or 0.3%, at $85.49. U.S. West Texas Intermediate crude futures for October rose 29 cents, or 0.4%, to $81.29. U.S. government data on Wednesday showed the country's crude inventories fell by a larger than expected 10.6 million barrels last week, depleted by high exports and refinery runs.
Prices of liquefied natural gas, LNG, could spike this winter even with high storage levels in Europe, a Tokyo gas executive said, as many political and market uncertainties remain. There are still many uncertainties, including the situation in Russia and Ukraine, sanctions against Russia by the G7, the status of pipeline and LNG exports from Russia to Europe, the recovery trend in China's LNG demand and supply concerns, said Atsunori Takeuchi, Senior General Manager of the LNG Business Department. So the possibility of LNG price hikes still remains.
Moving on to the top news in the energy sector.
Prices of liquefied natural gas, LNG, could spike this winter even with high storage levels in Europe, a Tokyo gas executive said, as many political and market uncertainties remain. There are still many uncertainties, including the situation in Russia and Ukraine, sanctions against Russia by the G7, the status of pipeline and LNG exports from Russia to Europe, the recovery trend in China's LNG demand and supply concerns, said Atsunori Takeuchi, Senior General Manager of the LNG Business Department. So the possibility of LNG price hikes still remains.
Iran's oil output and exports jumped in August despite U.S. sanctions, according to consultants and companies that track tanker shipments, as Tehran sells to buyers including China. Analysts said the higher exports appear to be the result of Iran's success in evading U.S. sanctions and Washington's discretion in enforcing them as the two countries seek better relations. The United States has sought to limit Iran's oil exports since Donald Trump exited a 2015 nuclear accord in 2018 and reimposed sanctions aimed at curbing revenues to Iran's government. But the exports have risen during President Joe Biden's term, with China a top buyer, according to the industry trackers.
Next, we have the top news in metal markets.
India's finished steel imports from China touched a 5-year high in the first 4 months of the fiscal year that began in April, according to provisional government data reviewed by Reuters. During April to July, China was the second biggest steel exporter to India, selling 0.6 million metric tons, up 62% from the same period a year earlier. In all, India imported 2 million metric tons of finished steel in the period, the highest since 2020 and up 23% from a year earlier. China, the world's top steel producer, exported mostly cold-rolled coil or sheets to India.
Copper prices slid on Thursday as data from top consumer China showed further shrinkage in the country's manufacturing sector highlighted poor demand prospects, while a stronger dollar reinforced negative sentiment. Benchmark copper on the London Metal Exchange, LME, was down 0.7% at $8,408 a metric ton at 10:25 GMT. Prices of the metal used in the power and construction industries are on course for their first monthly decline since May. China's official Purchasing Managers Index, PMI, held below the 50 line that divides expansion and contraction for the 5th month running in August, maintaining pressure on Beijing to step up policy support for the economy. We will now look at the top news in the agricultural sector. Refined sugar prices on the Intercontinental Exchange, ICE, rose to a 12-year high on Wednesday, buoyed by the prospect of tightening supplies as dry weather threatens to curb production in India and Thailand, and some countries ban exports. India is on track for its lowest monsoon rains in 8 years and is expected to ban mills from exporting sugar in the coming season starting in October. The weather has also been dry in Thailand, which is another leading exporter. The dry weather has been linked to El Niño, a naturally occurring climate event that the World Meteorological Organization says has a 90% probability of persisting in the second half of 2023.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.